Picture this. You're in a massive conference hall packed with 1,000 of the world's sharpest minds. Ivy League grads from Harvard, Yale, and Stanford. They wield supercomputers crunching millions of data points per second. Their days stretch 16 hours poring over financial statements, dissecting earnings calls, forecasting economic shifts with AI precision. These are the titans of Wall Street, the ones who supposedly hold the keys to fortune. Now, what if I whispered that you, a regular person with a day job, no fancy degree, and zero time for stock charts, could outperform nearly all of them by doing nothing at all? It sounds absurd, like a scam email promising overnight riches. But this isn't fiction. The entire financial industry thrives on convincing you otherwise. They peddle the myth that investing is an elite sport, complex, high stakes, reserved for geniuses. Tune into CNBC, scroll TikTok finance gurus, or open your trading app. They bombard you with breaking news, volatile charts, and hot tips. The goal? Keep you hooked on the dopamine hit of a winning trade, the adrenaline of spotting the next Tesla or Bitcoin before the crowd. Yet, the harder you chase, the more you lose. There's an unbreakable mathematical truth in the markets that 99% overlook. It's why a humble janitor like Ronald Read amassed $8 million without ever beating the market. It's why Warren Buffett, the Oracle of Omaha worth over $100 billion, instructed in his will that his heirs dump most of their inheritance into one dull, passive tool, not even his own Berkshire Hathaway. Welcome to Financial Stud, where smart money moves meet unstoppable success. Get ready to master your finances and unlock your true earning potential. Today, we're exposing the lie. We're unveiling the index fund, the legal cheat code the ultra-wealthy use to grow fortunes effortlessly. By video's end, you'll see why hunting individual stocks is like searching for a needle in a haystack when you could own the whole damn farm. Stick around. The revelation might change how you handle money forever. Part 2. The Fruit Basket Paradox. To grasp why index funds are revolutionizing wealth in 2025, let's unpack the fruit basket paradox. Envision a bustling farmer's market with 500 stalls, each hawking a single fruit. Crisp apples here, juicy oranges there, exotic dragon fruit over yonder. You've got $100 burning in your pocket. The average investor struts in like a fortune teller, betting everything on one stall. Dragon fruit's the future, they declare, swayed by a viral post or overheard chatter. All $100 goes in. But then disaster strikes, a pest infestation wipes out the crop. Your investment plummets to $10. Panic sets in. You sell at a loss, vowing to get smarter next time. Now flip the script. At the market entrance stands a vendor with a single magical basket. For the same $100, you get a sliver of every fruit from all 500 stalls. If dragon fruit flops, no sweat, the apples boom from a health trend, oranges surge with vitamin hype. Your basket averages out, growing as the overall market thrives. This is the index fund in action. It's not picking winners. It's owning the game. The S&P 500 Index Fund, for instance, bundles the top 500 U.S. companies by market cap. Buy one share of VOO, Vanguard's S&P 500 ETF, and you're instantly a co-owner of Apple, innovating AI, Amazon, dominating e-commerce, Google, Alphabet, powering search, Tesla electric vehicles, Microsoft, cloud and software, and hundreds more. No crystal ball required, just faith in capitalism's long-term upward march. But suspense mounts. If it's this straightforward, why isn't everyone a millionaire? Why do day traders still blow up accounts on Robinhood? Why do stock pickers dominate headlines? The culprit is a deep-seated psychological snare, one that traps even the savvy. And it's exactly why Financial Stud exists, to arm you against it. Part 3. The Financial Stud Philosophy. Before unleashing the hard data proving index funds' dominance, let's align your mindset. At Financial Stud, we're not about hype or quick flips. We're at the crossroads of psychology and prosperity, decoding why humans sabotage their wealth and how to override it. Being a financial stud means ditching the illusion of glamour. Forget the Lambo flexes or diamond watches. True studs build quietly, leveraging science over sensation. Most investors crash because they chase thrills, the gambler's high of a 2x stock pop, the ego boost of outsmarting the market. It's addictive, like slot machines rigged against you. Here, we strip away emotion. We dissect data, engineer systems, and let compound growth work while you live life. If you're fed up with gambling your retirement on memes or expert picks, if you crave a boring, reliable path to empire building, subscribe now. Join our community of disciplined builders turning knowledge into net worth. Notifications on. We're ditching the chaos for proven results. Now, brace for the numbers. Wall Street buries the proof that passive investing isn't lazy. It's lethal to the competition. Part 4. The 80% failure rate. Enter the SPIVA Report. An annual bombshell from S&P Dow Jones Indices, tracking active fund managers since 2002. These pros, armed with PhDs, insider networks, and billion-dollar research budgets, aim to beat benchmarks like the S&P 500. The verdict? Devastating. Over 15 years ending 2024, 87% of U.S. large-cap managers underperformed the S&P 500 index. Extend to 20 years, 94% fail. Globally, it's similar, 80 to 90% flop across asset classes. Even in volatile markets like 2022's bear run or 2023's AI boom, most experts lag. Why? Active picking demands perfection. Spotting undervalued gems, timing entries/exits flawlessly. But markets are efficient. Prices reflect all known info instantly. One misstep, like missing Apple's rebound or betting against Tesla, and you're toast. Individual stocks amplify this uncompensated risk. You're wagering on one company's fate amid recessions, scandals, or disruptions. Think Enron's collapse or WeWork's implosion. Index funds? They spread risk across sectors: tech, healthcare, energy, capturing the market's average 10% annual return, 1926 to 2024. Per NYU data, inflation-adjusted 7%. The math is magic. $10,000 invested in the S&P 500 in 1990 grew to $200,000 by 2025, with dividends. Same in individual stocks. Luck-dependent, often underwhelming. Patience isn't the hurdle, it's the superpower. Part 5. The hidden fees murdering your wealth. But index funds' edge sharpens further with finance's silent assassin, fees. Active funds charge 1 to 2% annually for expertise. Harmless? Hardly. Compounding reverses. A 2% fee over 30 years devours up to 50% of potential gains, per Vanguard studies. You shoulder the risk. They skim the cream. Example: $5,000 yearly investment at 7% return. Market average minus inflation. No fees. $500,000 after 30 years. 1.5% fees. $350,000. That's $150,000 vanished, enough for a house down payment. Index funds? Ultra-low costs. Vanguard's VO boasts 0.03% expense ratio. Fidelity and Schwab offer zero fee options. You're keeping 99.97% of returns. In 2025, with robo-advisors like Betterment auto-rebalancing at 0.25%, accessibility soars. Real story: John Bogle, Vanguard founder, popularized index funds in 1976. His low-cost revolution saved investors trillions. Yet Wall Street resists. Fees fund their yachts. We're plugging this leak, redirecting profits to you. Part 6. How to start today. Ready to activate this cheat code? No Wall Street suit required, just a device and minutes. Target ETFs/mutual funds mirroring broad indices. S&P 500, VOO, SPY, or Total Market, VTI, covering 4,000 plus U.S. stocks. Steps: open a brokerage, Vanguard, Fidelity free trades. Fund via bank link. Buy shares, e.g., $100 minimum. Automate monthly buys. Catch, discipline. Markets crash, 2008, -37%, 2020. minus 34%. Selling panics locks losses. Hold long-term. Recoveries follow. S&P up 400% post 2008. Dollar cost average. Invest fixed amounts regularly, buying more shares cheap. In video 3, we'll screen share, opening accounts, picking funds, setting automations. Theory becomes reality. You've unlocked the lazy millionaire secret. Index funds aren't passive, they're powerful. Stop stock-picking roulette. Own the market. Act now. 1. Subscribe to Financial Stud and hit the bell icon for Video 3's account setup walkthrough. 2. Comment. Index funds. Yes or no? What's your first buy? I'll respond personally. Share with a friend chasing hot stocks. Save them from the lie. No more excuses. Build your empire today. See you in Video 3. Let's invest. Thanks for watching. Stay curious. Stay capable.